CERN Basher, you and I are not in this league, but in the race, I don't think, not possibly I'm wrong, but in the race to be the most wealthy person on planet Earth, we had Mr. Ellison of Oracle jump into the fray yesterday, come close, maybe even pass Elon for a minute during trading yesterday. But based on what I was looking at the close just a few minutes ago, we're recording this at 1:05 California time. At the close, Elon was up 20%, I'm sorry, 6% on his Tesla shares today, and Larry was down 6% on his Oracle shares. So I suppose Elon is well back into the lead.
I think so. And I think if Elon looked at somebody who could surpass him for a period of time, I think Larry Ellison would be a worthy candidate. My understanding is the two are pretty good friends.
Yeah, I think that's
So
good.
it's kind of nice when your buddies are up there with you in terms of financial success.
Well, the interesting thing is maybe because of politics, it looks like all of these Magnificent Seven guys are friends now.
Right. There was a funny exchange. I'm not sure. I saw it again recently when Elon decided to buy Twitter. There's a text message between him and Larry Ellison. And Larry's asking, how much he should invest. And Elon just kind of casually asked for $1 billion.
Yeah. Yeah, casually. Just
Yeah.
in case you've got it handy, if you don't have to sell any real estate to get there or something. Yeah.
Right.
And
Yeah.
did you pay any attention to how I didn't read the whole article, how Larry Ellison got back up to 47% ownership? Was that did he just I mean, how did that happen? He was like down around 25 or something, and now he's almost half.
Good question. I'll have to take a look at that. I don't know.
Yeah. All right.
Yeah.
Interesting.
You're giving me homework already.
Haven't even begun yet. Yeah. All right. So yeah, and then of course I already made the point. We were up 6% today. I don't know if you were going to cover this in your slides, but we broke through every single technical barrier that was out there among the technical analysts, of which you and I don't profess any knowledge, only reading headlines from time to time.
Yeah, and I would say that once you break technical barriers, there are instantly other technical barriers that are thrown up. So it's a never-ending battle with the technicals.
Yeah. Now, according to Nicholas Gibbs and others, this 367 range one, there isn't anything else until 400. It's like one of those natural technical round number barriers at 400 is the next stop. So it's quite a leap where there's just nothing that has we haven't gone there before.
Price discovery, Randy.
There you go. That's right.
Yeah.
So it'll be interesting to see, because we did close at the high today, just for fun. Even though this will be produced many hours from now, we are still going up in the after hours. So we closed at the high, going up in the after hours. So kind of depending, I suppose, on how it all settles out overnight, we'll see whether there's a continuation of this screaming rally tomorrow.
It's a wonderful thing when it happens. It just needs to happen a little bit more often, but I think those days are coming.
I think so too. All right. Well, sometimes you bring slides. I don't know. Did you? Yeah.
I have a few, and I just want to say before we leave the previous topic about the world's two richest men,
Yes.
and your comment in prefacing that, I'm actually richer than both of them.
I guess so.
And at the end of the show, I'll prove it to you.
Okay.
Okay. But just hold that thought for now.
I don't know. I have a sense where we're going with this, but
Yeah.
it's okay. Whoa. Woo.
All right.
Mm.
We'll start with some pretty Cybertruck images. Don't know exactly where this is, but you can kind of see a Cybertruck in there.
Yeah,
I guess this is planning ahead for when we're on Mars.
yeah, I see.
Yeah.
The red
Anyway,
planet. Yeah.
you could put any vehicle, I think, in this photo, and it would look similar.
Yeah. You like
All
it
right.
hard
That's
to,
the Cybertruck images out of the way,
okay. And the disclaimer.
and the disclaimer. So, as you recall, we had a little event earlier this week, and I'm sure you've talked about this quite a bit.
Yeah.
The Las Vegas and Las Vegas. But I just wanted to discuss this with you because you and I haven't had a chance to talk about it.
No.
right? So they talk about how energy demand is increasing 3% annual load growth globally,
Right.
and how 10% of the US energy demand could be driven by AI by 2030.
Right.
So pretty phenomenal for one startup industry to account for 10%. So the question is, how are we going to get there?
Yeah. Because as a country, I think most people probably listening understand that as a country, we've barely been increasing our energy demand or supply for decades. I mean, it's like
Yeah.
under 1% a year, I think on average, maybe even maybe way under 1% a year. So this is the infrastructure, the supply chain is not there.
Right. Now, the good news is that in terms of energy generation, we have some time. We need to build it out for sure. We're falling behind China quite rapidly in that area. But the good news is that the grid capacity is actually higher than our demand most of the time,
Hmm.
right? And so occasionally we get above capacity and there has to be shutdowns and so on. But this is where the Megapack comes in, right? And so Tesla's suggesting that I guess you can't really see it very well on this curve, but if you shift the curve up,
Hmm.
you can use Megapacks to take care of these situations. So you can shift that whole lineup quite a bit and use Megapacks to shave out all these different peaks.
Right.
I think Elon made a comment this summer that we could essentially double the effective energy from our grid by using energy storage.
Exactly.
So that gives us a little bit of headroom as far as growth goes.
Right. And it's the energy storage is part of the story of doubling, but part of the story is actually the smoothing.
Smoothing.
Right.
Yeah, that's right. Okay, so we know that Tesla has delivered 36 gigawatt hours of battery storage products into the world since inception. I guess they're showing since 2020.
Mhm.
And their capacity as it stands right now is probably around 90. Is that right? Yeah, about 90. 40 at Lathrop, 40 at Shanghai, and about 10 for Powerwall.
Right.
And then we're adding another then 50
Right.
from the Houston factory,
Mhm.
which was discussed that capacity would be 50 gigawatt hours a year.
Right.
So Tesla's capacity has increased a lot. The problem is that they say that we need to get to about 2.3 terawatt hours per year,
Right.
which is quite a bit bigger than even if the capacity is 100, 150. That's a lot of growth to go. They would have to have 23 times as many, Megapack factories as they do now.
Yeah. Yeah.
So we didn't get any announcement about any kind of expansion of Megapack factories, but you would imagine over time we'll start hearing more and more about that.
So I'm certainly expecting to.
Yeah. But one of the things they can do in the meantime is accelerate deployment of these things. And this is what the Megapack, this announcement was largely about. In addition to effectively increasing the size of the Megapack. So they're now calling it a mega block. And you take 4 Megapacks together and you get 20 megawatt hours of energy storage.
Hmm.
They have effectively increased the size of each one from about 3.9 to about 5.
Right.
But put 4 together, it's more efficient in setting up. They've got the inverter kind of built into the middle here. And apparently Tesla is going to make their own inverters. That was also news that we learned the following day.
Right.
Um, so anyway, the whole thing here is to make Megapack more efficient and then the deployment of that more efficient. Now, they haven't totally solved this because there are some places in the world that operate outside of this temperature band,
Okay.
but this is pretty good.
Yeah.
It's pretty good from minus 40 Celsius, which is pretty darn cold. I've experienced that personally, to
Okay.
60 Celsius. I haven't quite experienced 60, but this is pretty warm.
Yeah.
Yeah.
Yeah. 7/4 plus 32. What is it?
Oh, I don't even know.
I remember from high school.
Yeah. It's just cruel that the US is still using Fahrenheit. Um, but one of the key announcements, I think, was the installation time. 23% faster installation.
Yeah.
And the good news is they can still transport these on trucks. Um, I forget how they described this. Was it seven axle trailers or something like that? And you can see these aren't typical trailers because of the weight, but they certainly, from a form factor standpoint, they still fit on a flatbed.
Right.
But pretty darn heavy.
Yeah. Yeah.
Um, and then, of course, the most important thing I think was they can install 1 GWh in 20 business days,
Right.
which is pretty phenomenal.
Yeah. And we didn't hear what it was before, but my guess would be a lot more. Like if it was, they said 28% faster, but what did that really mean? I'm not sure exactly what that meant.
Well,
So,
I found a
oh,
press release, I think, from 2019, 2020, and
okay.
they were talking about installing this amount in something like 3 months.
Yeah. Okay. All right.
So back then, certainly quite a bit slower.
Right.
But anything you can do, I think, to get these on site and get them hooked up and going, the better. It should also help with revenue recognition a little bit too.
I think so. Yep.
And I think we learned that there's about 30 GWh of storage waiting to be connected, basically.
Yeah.
So
Yeah.
that might bode well for this quarter and the quarters ahead as far as revenue recognition. Um, but the most important thing for me is this, and they talked about it a little bit. And we don't have a lot of data, and they don't really show much in the way of numbers here. Well, they don't really show any numbers. It's just a graph relative to other systems.
Uh-huh.
But they're showing that Autobidder is getting more dollars per megawatt hour per year than anybody else,
Right.
any other system. Autobidder is the AI-powered energy optimization software. And so this is one reason to pay a premium for Tesla, if in fact they're charging a premium for their systems,
Mm-hmm.
is because you're getting more out of it on a dollars per megawatt hour per year basis.
Yeah, and I think if we go back to, people may remember, if they've been following it a long time, that, whatever that was, 2.5, 3 years ago, when, before I started this channel, or right after I started the channel, Elon had the bet with Australia that he could put in, I think it was 100 megawatts. I could be wrong, but he could put in this one system by December or something and have it
Yeah.
operating. And otherwise, if he didn't do it, they would get it for free.
Yeah.
And of course, he did deliver it with plenty of time to spare. But then they and everybody else in Australia kept buying the heck out of these systems, because it turns out that what they were interested in more than anything, they wanted to stop the blackouts and the brownouts. But what they really saw was the financial savings. I believe it paid for itself within 2 years. The very first one. It might have been less than that, but it was around 2 years, maybe a year and change. But that is what Australia's been looking at, is that financial benefit.
Yeah, and this is interesting too, and I think it depends on the utility and the grid and so on where they operate, but there's certainly some opportunity for some arbitrage, pricing arbitrage to go on here too.
Right.
And that would be interesting for Tesla as an energy company to kind of play that game.
Yes.
Set up their own systems, add energy to the grid, and arbitrage those prices. That would be doing a tremendous service actually to those grids, and would be a nice revenue opportunity for Tesla, but certainly for the customers that are buying these as well, if Tesla's not doing it themselves.
Exactly. Yes.
Yeah. So unfortunately, we don't really know a lot about Autobidder in terms of its economics, but I understand it to be pretty attractive, pretty effective. And this is another sort of really important aspect, I believe, to the Megapack story.
Right.
Tesla is also saying here that, the project is our product.
Mm-hmm.
And again, this is a message to their buyers that, we're not just selling you a box.
Mm-hmm.
Your whole project is what we're focused on, and getting it up and running as efficiently as possible, quickly as possible.
Now, Cern, I did a report on this the other day, where I went down all of the incredible pieces of the mega block, because they changed the cell, they changed the density,
Yeah.
density of the cell, they changed again, making their own transformers, but there was like a whole series of things all the way up that were incredibly improved, including, of course, the Megapack itself, which is Megapack 3 now, version 3, What I haven't been able to figure out is whether these cells, whether Megapack 3, are going to be made in the other two locations, and if so, when. So right now, it would appear that the Megapack 3 will only be made in Houston, and maybe then they'll switch over the other two. But there was nothing about that. I'm hoping that becomes a question at the meeting in October.
Yeah, it's a good question. We don't know at this point. I would imagine if this new version is that much better, then they would shift over.
Mhm.
Particularly, I would expect to see it in China, but probably Lathrop as well.
Yeah,
Yeah.
it may depend on the cells. This is why I'm kind of raising the issue. If it's a brand new cell with more power density, that it may depend upon
Yeah.
getting enough cells to be able to make the transition at the other locations.
You bet. Yeah, that would be a logical issue, right? If that's the sort of stumbling block, then they have to resolve those issues first.
Right.
Yep. They also probably have a backlog of orders for the other ones,
Right.
right? That you need to fill. But yeah, anyway, we'll see how that transpires. We also, I think, learned that in Shanghai they are going to be at their factory stated capacity by the end of the year.
Right.
Production of 10,000 megapacks a year.
Mm-hmm.
I think it took a couple of years for Lathrop to ramp up, and in China, it looks like it's about a year.
Right.
So, Shanghai speed is at work again.
Yeah, I think people were like, giving China a lot of credit on that one. Where I think there was, if we go back out, maybe I'll ask Bradford, which will be actually already have been shown by the time people are watching this, but I haven't done it yet. Maybe I'll ask Bradford because when he was the spy, if you will, on Lathrop, there was a big long time when they got up that 50% capacity before they even started trying to go to 100%. And there were issues about the loading equipment. There were issues about the number of doors. So I think that was a studied decision, maybe from day one, that it was going to take that long, as opposed to with a ground built from the floor up second location, it should be a lot easier to get all that done.
Yeah, the Lathrop facility, if I remember correctly, was like an old JCPenney warehouse or something like that.
Something like that, yeah. I think maybe Target, yeah.
Yeah, one of those companies. So it wasn't exactly a purpose-built facility.
Right.
The parking lot where they send the product out looks always pretty full. Looks like there's not much room to move around there.
They actually purchased or leased a second building where they warehouse finished product as well.
Yep. Okay, Randy, we have identified a problem that FSD cannot solve.
A problem that FSD can't solve?
Yeah. Now the good news is that no human can solve this either.
Okay.
Here it is. It is the figure 8 traffic circle.
Oh my.
The good news is this doesn't exist in real life.
Okay. All right. Okay. It looked like Disney or something. I wasn't sure.
Yeah, it could be. Yeah, you could make those mousy or something like that. But this is the kind of thing we'll have to do to stump FSD in the future, is come up with traffic designs like this, lane designs like this.
I see. Yeah.
Yeah.
When it's all FSD, everybody has.
Yeah.
Autonomy.
Usually when you're in a traffic circle, at least in this country, you have the right of way. It's not so true in Europe. So I don't know what happens here if you've got two cars in the two circles. Who has the right of way? Yeah. Anyway.
Yeah.
This is this morning from AJ, and we'll just talk about this a little bit this morning. I'm not sure if you've talked about this yet today or not, but apparently Mexico slapped a 50% tariff on Chinese vehicle imports.
Wow.
And according to AJ, slamming the door shut on another key market for Beijing's automakers.
Wow.
Right. So he says, with this move, North America and Europe are now effectively off limits to Chinese cars. High barriers in the US, 100% on EVs. Canada and the EU up to 45%. So Chinese firms can still try to sell, but expect razor-thin margins and zero meaningful gains.
Interesting.
Now Jeff challenged him a little bit and said, it's a start. I'm not sure 50% is enough on a $12,000 to $15,000 car, for example. And AJ says, well, add to it the shipment, non-shipment logistical costs, lack of network density, and low volume sales outside the few population centers in Canada. large geographic spread of Canada, adding additional overland shipment, etc.
Right.
And he says, after you think this all through, you'll understand why BYD's vehicles in Europe are still so expensive.
Yeah, so I was kind of surprised. I didn't see this until now. I've been out all morning. So I'm kind of surprised Jeff was so quick to jump on the idea because my understanding is that at this point, labor in Mexico is substantially lower than labor in Canada. So assuming technologically, the manufacturing capabilities are even close in terms of automation and whatnot in Mexico, it would seem to me that having local manufacturing, local supply chain, et cetera, and not paying shipping and any other even modest duties. This is what I found with my bottles is every time that I tried to import the bottles, it was the freight that killed any chance of making them in China.
Mm-hmm.
That was, 15 years ago.
Yep, it's interesting, isn't it? And then here, Al Gore's head, whoever this is, says Canada might remove 100% tariff being floated by the current government.
Ah.
And AJ pushed back and says, my guess is that that'll be lobbied away since it would kill a lot of the Canadian auto industry. And then the reply was, well, Canada wants China to remove the canola oil tariff. Right. And he says, I think Trump's tariffs will crush the Canadian auto industry and legacy auto will pull out over the next 5 to 10 years. So the Canadians may be giving up on the U.S. auto industry. The U.S. may be giving up on Canada, and then that may force Canada to kind of jump into bed with the Chinese. We'll see how that transpires.
So all of this may be completely a useless game if my estimates, and maybe I don't know where you are in your estimates, my estimates is that by the end of 28 or at the worst 2029, I'm not sure that companies will be selling cars to humans anyway.
Well, that's right. The rapid rollout of Robotaxi in the U.S. and, of course, worldwide would assume then that the pricing, the cost per mile is super low, and therefore many people would decide not to buy a personally owned vehicle.
Exactly.
Right. And so the demand for vehicles will come way down. We still need to solve for the issues of people need to keep stuff in the car. Some people like to have all their stuff in the car, child car seats, that kind of stuff. But perhaps in a world where it's, more than 50% robotaxi, we come up with some other ways of dealing with things. One of the things I've thought about for contractors who drive around, big heavy trucks full of stuff is put all your stuff in a trailer.
Yeah.
Buying a trailer is a lot more
Right.
cost effective than buying $100,000 plus truck.
Exactly.
Right. And just have a Cybertruck truck tow it around for you.
Right.
So I think there's lots of creative things that we'll see, and it'll allow a lot of people to save a lot of money. Particularly, people won't have to buy, at least that second or perhaps third car. So the demand for personally owned vehicles should come way down, and it may be a lot quicker than many people think.
And what happens is that you get below the level of where you're capable of manufacturing the car. So most cars you're going to need at least 20, 30,000 a year to justify the line.
Yeah.
And so the first thing that I would expect to see happen would be some car companies going out of business and some car models being discontinued. But then eventually, even though you've got some niches that, like, let's say, for instance, maybe your off-road type vehicles would last longer, the look as well as the use case. And there might be other things, a small pickup truck, say, for instance. But eventually, I think all of those things will be obviated by some kind of rentable vehicle because we're talking about getting down to 50 cents a mile, at which point it's just stupid to own a car.
That's right. Yeah, economics will win. It's just a question of the time frame that we're talking about.
Right.
Yep. Okay, let's talk about inflation, shall we?
Okay, why not?
This is a pretty good cartoon.
Yeah.
Inflation is that big baby, that big kid that just won't shrink, I guess. This poor woman pushing her cart through the grocery store.
Yeah.
Um, So we had CPI reported today. I'm sure you've talked about this. We've got CPI at 2.9%,
Right,
the highest level since January. So that's a little uncomfortable.
right.
Ex food and energy, it was 3.1.
Mhm.
These were all within expectations, however,
Right. Mhm.
so no big surprises. And according to Charlie, the Fed is expected to cut rates by 25 basis points next week, and another 25 in October or December.
Right.
You agree with that, Randy?
So, okay, what should the Fed do? What will the Fed do? What the Fed should do is lower the rates 50 to 75 basis points in September and not raise them the rest of the year unless they need, I mean, lower them, I'm sorry, lower them the rest of the year unless they need to, because they've waited too long, as Trump has been saying for months. But the market, the what do you want to call it? The betting markets are saying that it will only be 25, 25, 25 or 50, 25. So that seems to be the range of possibilities, but nobody at this point thinks it'll be zero.
Yeah. Yep. And I agree with that. Here's some further details. Year over year, biggest increases in gas prices, gas utilities, which seems a
Natural,
little weird to
natural,
me.
natural gas, yeah,
Natural gas
right.
seems a little weird because we're kind of like off season right now.
Well, also natural gas was at least in the marketplace. Natural gas was at very low last month, in the month of August. It's creeping back up again now, but it really went quite low. It was in the twos, and it's back up over three again. But yeah, I'm kind of surprised at this number. Maybe it was particularly hot in some parts of the country. I'm not sure.
Was it abnormally low a year ago, the price of gas, natural
Oh,
gas?
that's another good question. Could have been a problem with
Right.
last year's number. Yeah.
Yeah. So that sometimes you get that. Electricity costs up 6%. Again, no great surprise
No,
given summer heat and potentially we're seeing, AI demand starting to impact pricing.
right.
Used cars, I'm a little surprised that used car prices are so strong. So up 6%.
So your tariffs going up on new cars could be impacting used cars.
Yeah. Medical care, food away from home up about 4%, shelter 3.6, and so
I got
on.
a question. I got a question for you on food away from home. Do you eat out much?
No,
I don't
less
eat.
and less.
I eat out less and less too. But the funny
Yeah.
thing is, when I do eat out, it's a shock every time.
Yeah.
But I have no idea what it. In other words, if it went up 3% since last year, I wouldn't know because it's so shocking to begin with that I don't have any context. I
Right.
don't have anything in my mind to compare it to.
Yeah. Yep, we found that the combination of the higher prices, the food quality, and just the experience itself have all been challenged.
Yeah, yeah.
I wish I could say that was not the case, but
Right.
that's the way it is. Here's from Jim Bianco. This is the probability of a cut in September has barely moved on today's data.
Okay.
So 11% apparently probability of a 50 basis point cut, 89% for 25 basis points, and zero for anything else.
Right.
Um, So we'll see. This always gets me that there's no chance of anything else. There actually is some chance, but
Right. 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 Right.
that's what the market is pricing. What happened to the jobs numbers? The
Well,
truth.
let's take one more minute on the bonds on the interest rate numbers because probably the main reason why Tesla was up as much as it was today was probably because the bonds were touching 4.0 on the 10-year, and we're actually under 4.0 at one point. They didn't close under, but they're very close, like 4.01. So probably going to drop into the threes tomorrow or next week. And so we have this situation where Tesla gets three benefits from those interest rates being down. One is the discount rate on the stock itself, as people estimate the value of the product of the stock and use the discount rate to do so. As the interest rates come down, that raises the price of the stock. Number two is they don't have to spend as much money if they are buying down interest rates, and or the customers are more likely to buy if it's the natural interest rate is lower. And what was my third reason? I can't remember right
Probably the discount rate.
now. No, it was the first reason was the discount rate.
Oh, sorry.
Yeah,
Yeah.
the second reason is because of the For the consumer themselves, I forgot the third reason. Oh, well, never mind.
Yeah, and there's one offsetting factor is that the interest earned on their cash hoard
That's true. Goes
would
down.
come down. Now, the other ones are probably a bigger impact, but
Right.
there's pros and cons to interest rates, lower rates.
So the Cathie Woods were screaming higher today. I mean, up similar numbers to Tesla, up 6%, 5%. So they're in the same boat. They get these same benefits.
Yeah. Yep. Okay. Jobs.
Yep.
What happened to the jobs numbers, Randy?
Okay, so I'm going to give you my analysis, then you can tell me where I'm wrong. My analysis is that we scraped off 900,000 off of the already scraped off 1 million. So we went from 2.7 million to 1.7 million to actually 800,000 in terms of actual jobs that were created in that 12-month period.
Yeah.
Therefore, the natural number, maybe, if that's the final number, maybe we were creating 74,000 jobs a month during that 12-month period. So the fact that we dropped down to 22,000 at this point, assuming that number's right, and there's no reason to think it's right because they haven't been right ever for the last 3 years. So if that number is right, 22,000 actually was a number that I predicted. I predicted it would be under 50. I said it would probably be between 20 and 50. I said that multiple times. I said, prepare yourself. That's probably going to be the number. And that's because we have out-migration. We have no immigration. We have dramatic drops in the number of zero people being new employees going into the federal government. We have some employees being laid off in the federal government, and we've got AI having some impact on job growth. So 22,000 is probably a great number. My prediction is that we will be between 20. We could have a couple of negative months, but we will be between 20 to 60, 20 to 75,000 going forward for the time being.
Fair enough. Regarding those revisions.
Yes.
Well, first of all, just to touch on this, the weekly initial claims tend to spike, as Jim is saying here, over holiday weekends.
Oh, okay.
So Labor Day weekend, so he would expect to see that come down.
Oh, interesting. I didn't pick up on that.
Yeah. So that's one factor just to keep in the back of the mind regarding sort of long weekend type situations.
Interesting.
Regarding that $900,000 revised amount.
911 jobs.
911,000 jobs. Yeah. Jim is making these comments. He says that that this covers a period of April 2024 to March 2025. So it goes back as far as 17 months ago.
Right.
Yeah, and he says this is a preliminary estimate, so we're still dealing with,
Right.
not final numbers.
Right.
There will be a final estimate in February 2026. And at that time, the April 24 to March 2025 payroll reports will be revised. Okay. So he says these revisions are done by comparing the establishment survey results from which the payroll report is derived to withholding taxes and unemployment insurance taxes.
Mm-hmm.
Okay. In other words, how many people were subject to payroll taxes versus what companies reported on the establishment survey.
Right.
Okay. Note the final revision blue has been less than the preliminary revision orange for 6 consecutive years. So history says the minus 911,000 will be revised down.
Even further.
Yeah. And the February 26 revisions to the April 24, March 25 payrolls will be less than the preliminary estimates imply, which is currently a downward revision of 76,000 a month. Okay.
Right.
All right. So here's those numbers. There's the preliminary revision in orange, and then the final revision. Okay.
Right.
So that number, here they are here, and here we are with this one. All right. He goes on. He says the Bureau of Labor Statistics commented yesterday. Their comments: businesses reported less employment to the 𝐄𝐦𝐚𝐢𝐥, the quarterly census of employment and wages, than they reported to the CES survey, the current employment statistics survey, right? And businesses who were selected for the CES survey but did not respond reported less employment than those businesses who did respond to the survey. Okay. He says an explanation for these differences, and here's the key point, is that companies are employing undocumented workers and not withholding tax from them,
Oh,
as they do not have social security numbers or worker permits.
yeah.
This explains why their survey results are significantly higher than the reconciliation to withholding taxes. The next chart shows that undocumented migrants were pouring into the country at a record pace right before and into the early part of this revision period.
Right.
So here's the revision period in the shaded box here. And so we had, and this is nationwide encounters at the border,
Yeah.
right? 250,000, and then it was declining, but still a large number,
Right.
right? And they're showing here since Trump that that number is a lot lower.
Right.
So there were people being employed, but they weren't being counted
Right.
because they weren't paying taxes.
Right.
So that's why the difference between the numbers, or one explanation as to why there could be such a massive difference. Now, he goes on to say, why does this matter? He said the Fed is getting set to cut rates later this month on the assumption that the labor market is slowing faster than the supply of labor or population growth, which is primarily driven by immigration. They fear that this is creating excess slack in the labor market. Rate cuts are supposed to stimulate the economy and increase hiring and reduce the slack. But he says if the supply of labor is falling along with labor demand, then the labor market might still be in balance at a lower payroll hiring rate. In other words, yes, payroll hiring is weak, but we do not need to hire that many people given the big slowdown in population growth.
Right.
So stimulating the economy with a rate cut would not increase employment, but rather foster higher inflation.
Possibly. Except if you take into consideration, well, first of all, on his side, let me take let me take it, assuming that he's right. The NFIB numbers, National Federation of Independent Business numbers, came in on Tuesday, I think. And on those numbers, you saw that small businesses, which are 60% of the economy, those companies with under 500 employees, those individuals in the survey said their number one problem was finding employees that were qualified for the work that they needed. And that a very large percentage, I want to say it was 37%, were looking to hire and not finding these employees. So that would suggest that there is this problem. Number two is you're seeing wages continue to go up, which is good. They're going up at a rate between 4% and 5% a year, which means that real wages are increasing, which is exactly what Trump is shooting for. That's exactly what he's trying to make happen with all of these efforts that he's doing. Is we got real wages going up for the working poor and for the middle class. But wages, what are wages going to impact in inflation? Well, they showed up this morning. The real increases this morning were in services, which is almost all wages. Okay.
Yep.
And that's where we saw the big increases today. Eating food eating out, that type of stuff. It's largely driven by wages.
It's a good thing the tips that you earned from this channel are not taxable anymore.
That's right. Yeah. So those are the things that would agree with him that inflation might be stimulated as a result of what he's talking about. I'm going to take the other side, which is the two areas of the economy that are most likely to be stimulated by dropping these rates are going to be durables and housing.
Yeah.
So we've already got the mortgage rates down this morning to 6.24. I'm thinking that they might get down into the fives next week. That's going to help housing. Already headlines are saying that it's already helping housing. The other thing it's going to help is going to be durables, which is these are the two parts of the economy that have been underwater for 3 years. Yeah. They've been in recession for 3 years. So this could very definitely help the economy without necessarily stimulating inflation.
Those areas could certainly use the help for sure. Another factor, Andy, that helps this labor issue is humanoid robots.
Yes.
Although will create its own set of problems.
Yes.
We've learned that this bot here on the right is not version 3, it's version 2.5.
Exactly.
It's a smoothed out version, a little bit less chunky legs perhaps, but it's not version 3 yet.
Right.
And we're hearing rumors that we may see version 3 between now and the end of the year.
Right.
So that would be exciting.
Indeed.
Yeah. And Elon has always said that it takes about 3 versions before you get to commercial product ready, version of a new product.
Yeah.
So
I think the best speculation I've heard out there from various people is that in the spring, they looked at the hands and they went, these are amazing, but look what we could do.
yeah,
I'm not necessarily thinking that some people are saying, well, they looked at the hands and they went, oh, this is wrong, or this is not going to work, or this is too expensive, or whatever. I think like everything else, the innovation path was rapid, and there was an awful lot of innovation that was being seen, and they went, no, let's stop now. Let's not do this version. Let's go ahead. It'll take an extra 3 months, but then we can do the version that's going to be much. In fact, I love the fact, I think you and I may have talked about this. I know Scott and I did. Scott kept saying, oh, I can't wait till I can play the piano. And I said, the heck with the piano. I'll know that this is a great device when it can play the violin. And Elon said he'd play the piano and the violin.
yeah, and it's interesting because from a labor standpoint, those two things are not necessary.
That's true. But the dexterity required for both.
Yeah, no, it's indicative, I think, of its capability, which ultimately will be important.
Right. Right.
And certainly, Elon's talked about threading a needle and that type
Right.
of thing. But to wash dishes and fold laundry, you don't need to be able to play the violin.
Right. Right.
Um,
Not even to work in my bottle factory.
correct.
Yes.
Yeah. So the robot is extremely useful, even with, barely functioning arms and hands.
Yes.
Right. So we're excited about that. Back to money for a second. I thought this quote was good. So Peter Maluk here of Creative Planning says, holding most of your portfolio in cash is like handing the Fed your wallet and saying, please burn it. And then he says, cash isn't king, it's kindling. And inflation is the match.
Yep.
Now, I think he may have misread the study a little bit. He says how Americans currently invest cash, including money market funds, individual stocks, and mutual funds, are the most popular investments.
Wow.
So 71% of people, I guess, at Fidelity or wherever they studied, held cash and money market funds.
Right.
Well, pretty much every single account that I'm aware of has at least some cash in it.
Yeah.
I'm
Yeah.
actually surprised this is not like 100%.
Right.
So nothing is particularly surprising about this to me. Although I guess you could say cryptocurrency, about a third of the people hold some form of cryptocurrency is interesting.
Yeah. Yeah.
A greater percentage apparently than hold ETFs.
Wow. That's
Which is
interesting.
actually surprising.
Yeah. Yeah.
Otherwise, really, this is within my expectations.
I wish I could quote who it was, but it was one of the major CEOs over the last couple of days was asked specifically the percentage that he thought you should hold in Bitcoin, because he was saying definitely you should hold Bitcoin.
Yeah.
And he said that he was still, in his opinion, it was still in the 2 to 3% range, not 5. So there's
Fair enough.
just one person's opinion.
Yeah. And I say, and this is not financial advice, is something north of 0 is good.
North of 0 is good.
Yeah. Now, Randy, since you brought Bitcoin up, that gives me the perfect segue to this chart. So I did a post this week on X about the idea are big companies taking too much risk?
Yeah.
And I'm talking about sort of business risk in terms of balance sheet versus income statement. So balance sheet is the assets that you own, and income statement reflects the revenue and the profits that you generate from the business.
Right.
Right. And so you could actually have a business with a ton of assets and very little income. And so the value of the business would be derived by its balance sheet value.
Uh-huh.
Most businesses aren't like that. Most businesses are fairly balance sheet light and generate a lot of income. And so their value is based on the profits that they're generating and the growth of those profits.
Right.
So case in point here, let's look at, we'll skip over Berkshire Hathaway. Let's look at Alphabet.
Mm-hmm.
Its market cap is 2.89 trillion.
Mm-hmm.
And they have 95 billion in cash and short-term investments.
Right.
So that 95 billion represents about 3.3% of the company's market value.
Right.
Right. And so you can say, well, the rest of this company's valuation is driven not by its cash on its balance sheet, right? But the income and the profit that the company generates and the expectation of the growth in that profit.
Right.
And Alphabet's position is very similar to that of Microsoft and Amazon. 2.5% for Microsoft, 3.8% for Amazon. TSMC, with 90 billion in cash and short-term investments, has about 8.5%.
Wow.
So it's actually kind of a standout amongst large cap companies.
Right.
And then Nvidia, at 57 billion, is only 1.3% of its market cap. Apple 1.6, Meta 2.5, Tesla 3.3. Now, Tesla is different than these other companies because Tesla's not buying back stock.
Right.
Whereas many of these other large cap tech companies are aggressively buying back stock. Nvidia is doing that. Apple's done that over the years, Microsoft, et cetera. So Tesla is still using its cash for funding its operations and its business growth, but they're not yet returning capital to shareholders. Okay, so I'm not too worried about this. Tesla over time will start accumulating a ton of cash, and the question remains what they should do with it.
Right.
Oracle now at almost $1 trillion, $11 billion, 1.2%, and then Broadcom 0.6%.
Wow.
So the two standouts on this list, the first one is Berkshire Hathaway with 344 billion in cash and short-term investments. Now, part of this makes sense because Berkshire Hathaway is kind of the insurance company to insurance companies.
Right.
They need a huge reserve in case there's some catastrophe somewhere in the world.
Right.
They need ready access capital. This also does not include the value of equity investments that they've made in the likes of Coca-Cola and Apple and other companies.
Right.
Okay. But their cash reserve is about a third of the company's value.
Right.
So this gives them a really nice, solid underpinning as far as their stock price goes. Right. The other big standout here is Strategy. It's a company with just slightly under 100 billion in market value, but they've got 73 billion essentially in Bitcoin.
Right.
So 75% of the value of the company is the value of the assets on their books. Now, I called this cash reserve. In this case, it's a Bitcoin reserve.
Right.
But they couldn't turn that into US dollars overnight. That would probably depress the Bitcoin price pretty quickly. But still, it's a pretty significant reserve.
Yes.
So the question I'm asking here is, and I'll show it graphically, what might be a better strategy as we head into a world that's about to be disrupted in so many ways? Now, the good thing for most of these companies on this list is that they're the ones doing the disruption.
Right.
Right. Really, all of them are involved in the disruption one way or another. And so the fact that they've only got, low single-digit % of their value in cash maybe isn't so terrible. If you were a company on the receiving end of disruption, this might be a massive risk. Okay. But I'm still suggesting that even in that scenario, look at what happened to Intel, for example. Now they've asked, or they've gotten, investment from the U.S. government. What happens if all those years ago that they didn't return dividends or, make stock buybacks? Would they have needed to do that?
Right.
So I'm just suggesting that companies may find themselves in a kind of a sticky situation as we go through this AI disruption. And maybe even some of these companies ultimately will struggle too. We'll have to see. And then here's just a visual of who has the most cash reserve. Berkshire Hathaway head and shoulders above everybody else. There's a reason that Goldman Sachs went to them in a time of crisis to borrow some money.
Right.
And Warren Buffett extracted a pound of flesh to give Goldman $5 billion.
Yes.
Yeah, I think some people at Goldman are missing a few of their limbs because of the pound of flesh that Warren asked for. Anyway, I thought that was interesting. And then final cartoon here is, how long have you worked at the Fed?
Yeah, exactly.
I had a cocktail party with the dinosaur holding a glass of wine.
Yeah. I'm surprised that they didn't use, some kind of a boomer joke on that.
Well, next week.
Next week. Okay.
And then, Randy, I just wanted to prove to you that I am, in fact, the richest man in the world.
Okay.
I have $100 trillion.
$100 trillion.
Yeah.
Okay. Yeah.
So I don't know if you've met anybody that has 100 trillion, but this is physical money. This is real money.
Real money.
It just happens to be from the Bank of Zimbabwe.
Zimbabwe.
But this is a real banknote from the Bank of Zimbabwe.
100 trillion. Yeah. And so will that in a quarter get you a cup of coffee?
At its peak, this bought 3 eggs.
3 eggs.
3 eggs in Zimbabwe. You needed
Its peak.
at its peak. You needed a wheelbarrow of these to buy anything of material value. Yeah. I believe that there was a German company making these banknotes,
Yeah.
and the production of them was quite large, and so that they were making quite a bit of money making worthless banknotes for Zimbabwe.
Yeah. Yeah. That's
So you can make money in hyperinflation if you're positioned properly, Randy.
have to have the right, you have to have the right place. Yeah. Right,
Yep.
right place in the pecking order. Well, okay. So I thought of course, see, you had me all set up. I thought you were going to, say that if you, took your $1 million that you've got in Bitcoin right now and it goes to 1 million, what would that be? 1 million times 1 million
Trillion.
is only a trillion? Is only a million just a trillion?
Yeah.
So yeah, that would give if the current million that you have in Bitcoin goes to $1 million, you would be at least in the running.
Yeah, I might be noticed for a day or so, but the good news is I have the 100 trillion in hand. So I'm looking over my shoulder waiting for Elon to catch up.
Okay. I know you don't predict the market, but to the best of your ability, are you anticipating, as most of us bulls are, that the rest of the year will be pretty shiny for Tesla stock?
I think it has the potential to be. I would hesitate to say it's shiny for the entire stock market, but I think for Tesla, I think there are lots of good things ahead of it. I think Q3 is going to be a strong quarter. I think we're going to see good numbers from energy in Q3 and Q4.
Mhm.
So that will help.
Mm-hmm.
It's a little bit of a wild card for me about autos for Q4, but I think that with the new model YL in China, that looks really strong.
Mm-hmm.
It's going to be interesting to see what Tesla rolls out come October 1st here in the US.
Right.
Right? They may have some interesting tricks up their sleeve with respect to autos.
Mm-hmm.
And then, of course, the Robotaxi rollout is the ultimate thing. Version 14 of FSD.
Unsupervised.
That should be coming soon.
Unsupervised.
Unsupervised, perhaps. I'm a little bit more cautious on that.
Mm-hmm.
I think it pays Tesla to be just careful. Did I see today that they got approval for Robotaxi in Nevada?
It is impossible for me to know. Again, I was out getting new specs.
Yeah, I think I saw that today. I should have included a slide on that.
Okay, all right.
But time got away from me this afternoon, so I apologize for that. But I think a number of things are kind of falling into place.
Okay.
Yeah. And I would say seasonally too for Tesla stock, it tends to do quite well in the last few months of the year.
So as I look back now, because always, hindsight is typically closer to 2020, which I will never be again, according to my optometrist. She was happy to get me to 2025 in one eye. So anyway, that should do for another few years. And especially I don't need to drive anymore because the car drives me. So I don't need my glasses for that. Anyway, kind of what I was looking at over the last couple of weeks is I had several times posted that we had gone through a bunch of catalysts that people were expecting to have an impact, upward.
Yeah.
And was like, we even had catalysts that we weren't expecting, like the mega block.
Right.
And so that was a huge deal. That is, again, there was maybe 7 very big deals in that Megapack. The fact that we're making our own transformers was a huge deal. So we had all of these things that you would have thought we would have gotten a point or gotten a couple of points out of it. Nothing was getting us there. I felt like the entire market was being like, it was like, okay, we need something really big to break out because we're already at these massive highs. Today would be what, 25 all-time highs, I think, for the S&P this year.
Sounds about right.
I think that's right. It's 24, 25, somewhere in that range. So I felt like there was going to have to be this something. But then when that happens, all of those catalysts that didn't come into the market, all of a sudden we get all of them at once.
Yeah, I love actually a situation like this when you see a company and it's meeting all the different milestones and things are improving and the stock goes nowhere.
Hmm. Hmm.
That's actually an ideal situation. Think about pulling a rubber band
Yeah,
further and further back, right? Eventually something's got to give,
right, right.
right? And we've seen that with Tesla time and time again. Um, Ultimately, it does come down to producing quarterly earnings that are higher and higher and higher, just like NVIDIA has been doing the last couple of years. And in my judgment, that day is coming for Tesla. We may see the start of it next year.
Hmm. Hmm.
Again, depending on Robotaxi ramp, that's the first milestone. And then, of course, after that, the Optimist bot ramp is the other key factor. And ultimately, it's the biggest one.
Right.
Um, so, yeah, I mean, I think that it's setting up quite nicely for an improved stock behavior.
Yeah, another thing I'll give you this homework that you don't, nobody tells you you have to do the homework I give you. But I did a show the other day and I'm looking at if we do get 100,000 extra vehicles by the end of the year, 50,000, 50,000, say 500,000 each, as opposed to the 460, 70 that some people are saying right now. And if we get 15 megawatts, no, gigawatts of energy
Yep.
in the third quarter and maybe close to 20 in the fourth quarter, we could be looking between all of that and natural, normal kind of margins. We could be looking at 90 cents a share instead of the 47 that people are talking about. That would be a stimulus for the stock.
Yeah, that would be hard for Wall Street to ignore if that transpired.
Right.
Um, and eventually we're going to see something like that quarter after quarter after quarter, just again, just like NVIDIA has been dealing with.
Right.
And it takes a while for people's Wall Street's expectations to catch up to that. In NVIDIA's case, it took about 2 years.
Mhm, mhm.
And now Wall Street's they've clued into the idea that NVIDIA is going to keep printing higher numbers quarter after quarter. They've finally gotten the message.
Maybe forever, who knows? All right, CERN. I think that we've probably, we could have turned that into two shows.
We could have.
Almost could have, but we won't. And maybe you'll be back. We've talked about possibly bringing CERN back like we did last weekend for a fabulous weekend show. So we'll see what happens.
At least it gives me a chance to change my shirt.
That's true. That's true. Would you like to borrow a print shirt? I mean,
Well, this is a print shirt, but not quite as what's the term?
I don't,
Uh,
I don't.
Visible as yours. Yeah.
Right, CERN. Thanks as always for bringing us delightful slides filled with comedy as well as learning and, stuff like that.
My pleasure. Thank you, Randy.
It's been great talking to all of you.